Welcome to SolarConnect. We are excited to get this going. Thank you so much for joining SolarConnect with us this fall and kick off session one, co-hosted by Enerflo CEO and co-founder Pat Bennett and Ohm Analytics founder Chris Collins. And with that, I'll hand it over to Pat to get things started.
Awesome. Thanks, Rebecca. Chris, thanks for joining us again. I think this is the third year you've done this with us. Appreciate it.
Yeah.
You're the man that needs no introduction in solar with data. I think you guys have built a great brand and a lot of trust over the last few years. So congrats on all your success.
Thanks.
So how are we feeling? How are we feeling about solar?
We talk current sentiment as to start, and we have some data points I want to share out. So I thought we could start there and just, I know you guys have some interesting tidbits. I think in summary, I would summarize it as more optimistic than we were expecting, and certainly more optimistic than the summer. And I think there's a few reasons for that. One is business is great right now.
Right.
People are really getting a lot of installs in, record sales months. I've heard that from in the data, but also heard it just recently from a few CEOs. October 2x what it normally is. And I think also people are being a little bit more aggressive on jamming stuff in to the end of the year. So we thought maybe it's stop in October, but I know folks that are selling to the end of November. So I think that's one reason people are optimistic is feels good right now.
Yeah, I'll tell you, coming off of like when I was at RE Plus, I think amazing. A couple months ago, coming off the big beautiful bill, didn't quite know what it was going to be, but I felt like the attendees there were in high spirits. Everyone was like looking forward to things. I think sometimes all you need is clarity, right? And it's like, even though the big beautiful bill maybe didn't do everything great for solar, just having the clarity of knowing, okay, now we at least know what we're dealing with. Now we can plan. I think a lot of people have done pretty well since then and have shown just that resilience in the solar industry that we've seen for the last 20 years. Yeah, I'd say we as a company, we're optimistic. We're seeing a lot of good things. And I do want to make sure that we're not repeating patterns of the past. There was a lot of optimism around NIM 3.0 too, shoving all those deals in. And then we saw a big fallout in California after that. Hopefully we're not repeating the past in some of those ways, but I would agree with your sentiment that a lot of good energy right now.
Yeah, I think what also is providing some optimism is two other things I'd call out. One is utility rates. Just what we've seen, we were chatting before, you guys have seen it in your data, but also we track forward utility rates, and you just have to open the front page of the Wall Street Journal to see that. So I think utility rates. And then the other thing is there's a lot of optimism around some of these new financial products that are coming out in pilot phase right now. I think a few things that are weighing on the market. One is people are being realistic about a pretty slow Q1, a bit of a hangover. And so people are thinking through how to get through that by kind of smoothing out and keeping staff, because I think they're more optimistic about the second half. So there are some real concerns about Q1. The other thing too is just around equipment supply, which is especially around domestic content. So I think those are real concerns. And hopefully some of them get resolved, but that's certainly weighing in the market. The last thing I'd mention too is around TPO pricing and the capital markets there. And I think it's a little bit tighter, and you've seen some price increases, and it's hard to track some of those transactions, but there were some interesting comments on the Sunrun call that they felt like there was a 50 basis point spread on solar ABS transactions that has changed. So it's gotten worse for solar transactions, and that's going to impact pricing a bit. So I think those are the few things that are weighing on the market right now. But I thought anything else to add there, or just...
No, I think that's great. Yeah, let's dive into your data and what your team prepared.
Okay, great. So I thought I could start with a contractor survey that we did, and we've shared this out with our subscribers a couple of weeks ago. But I think what is new is that we've had a bunch of conversations as follow-up to say, hey, we'll just get more context on that. So
that's awesome. Yeah, it'd be great to see the subjective data, how that correlates with any objective data you guys have.
Yeah,
I would say we're full of an industry of entrepreneurs and optimists, because we probably wouldn't be fighting this battle every day if we didn't believe we could win, and there is a huge need. So I think you're always going to have some optimism when talking to contractors compared to maybe looking at the data. But yeah, I'd love to see the results here. We go through it.
So yeah, I think that the main question we asked, we have a forecast of like down 25% for next year. And the main question we asked is, what do you expect for your business? And the median was down 14%. And so definitely more optimistic on a national basis. I think also there's big regional differences there. So I was just on the phone with probably one of the top top 5 companies in the Northeast this morning, and they're expecting to be flat. They've seen really strong utility rates in their markets, but I was on the phone earlier this week with somebody from Florida, and they were expecting down 30 to 40%. So definitely a regional variance based on energy prices and utility rates. So yeah, I think also you got to assume some optimism in here. And this is also an important point. This is for the full year, right? So it's hard to, I guess, if you're planning your business, you don't plan your business on the full year, you plan it by quarter, right? So you really got to be thinking about what to do in Q1. So I think that was a key takeaway. The other takeaway was on financing. So we asked people, how do you expect your financing mix to change? And there was about a 30% increase in TPO, which is pretty much in line with our forecast. The starting points are a little bit different, but the magnitude of the shift was.
So some interesting data on this that we've seen is one thing we track is like lender mix by installer. Like how many different lenders are they actively working with at any given time? And our data over the last 18 months has shown that they're going from an average of about 3.5 to 4 down to about 2 or like 1.8. That worries me a little bit because we saw in the past, like when you are so overexposed to one lender, like Sonova days, when that lender might have issues, you can be in a really bad spot. There are people overexposed to Posigen. When that kind of thing happened, people overexposed to Mosaic. So I think that's one thing is people listening, just a caution is make sure you have good relationships with your lending partners, but also consider diversifying a little bit so that you're not caught having issues if the provider goes under. Now, I will say the providers today are same ones that were around a couple of years ago, and so they're probably pretty strong and in a good spot. And you said you have some data maybe around capital markets and maybe strain we'll see there, but that is a trend we're seeing in our data that just want to make sure our contractors aren't going all in on one or two.
That's interesting. I remember talking with in 2023 or 2024 when you were seeing an increase in diversification. So it's actually gone the other way.
And I think because of the TPO push there's a lot of, there's just not as many TPO providers as there are loan providers. And I think a lot of them provides incentives. I think later we'll have panels around domestic content and safe harboring. And if TPO providers are doing that and providing you equipment, there's a reason to be with them. So I can get either side, but definitely want to make sure that installers have a healthy mix.
I think also what I hear too, just from a couple of conversations the last few days, installers are really, they're diversifying, but they're thinking very hard about their TPO providers, the stability, their backing. And there's a few, without naming names, there's a few larger companies that aren't necessarily in the TPO market that may be coming in. And I think people feel, this is feedback I got from a couple of installers, that they feel stronger about those companies. They've got big balance sheets. They've been in the business for a while. So I think it's important selection criteria for financial providers.
Definitely.
The other interesting topic, I know there's a lot of buzz around this, is prepaid leases. We asked, if you're doing TPO next year, what percentage do you think is prepaid leases? And overall they said 44%. And there's a big assumption here. We're assuming the cash and loan market drops pretty significantly, and I think prepaid leases is a opportunity to mitigate that. And so if you can do a lot of prepaid leases for that market, for that customer segment, it really helps mitigate the decline. 44%. I guess I've got some more color on this. I think in certain markets, and we were chatting about this, Pat, like in certain markets in California and Texas, it's close. It's going to get close to these levels already. Like I talked to one large installer in Southern California. They said about 50% of their Q1 pipeline will likely be prepaid leases already. So I think in California and Texas, where some of these providers have been for a while, it's happening now.
So for those listening, we have a finance battle later in the day, and one of our speakers is Thrive Power. They're ones with a prepaid that's getting really big. And so I'm sure they'll have some insight as well on that.
I think in terms of, so there's a couple of providers out there. I think we still feel like on a national basis for the full year, that 44% feels optimistic.
Feels high,
especially on an install basis. And a few reasons for that. I chatted with one installer yesterday who had said he had answered in the survey about 20%, but he still hasn't had conversations yet with direct providers. So I think a lot of those are still in pilot phases. There's some newer providers. I think it'll be more of a second half thing.
I think there's two other challenges to adopt it. One, you have to teach your sales team on how to have that conversation with a customer, because it is an interesting concept. Wait, I need to buy all my power up front. and I need to finance it through maybe a credit union or a HELOC or some other self-financing. So that's one. And then two, I think some of the big lenders in solar need to get in that game where they will underwrite and fund a prepaid and partner with some of these other prepaid or lease companies. Because if you start doing that, and as a sales rep, I can use a loan provider that's been in solar for a long time as the financing for that prepaid, it will help adoption as well, because then you don't have to tell the consumer, yeah, you can do this, but you need to find your own financing for that prepaid amount. So I
Yeah.
think those two things will make it take longer, but definitely a lot of appetite for it.
Yeah, yeah. But there are, I guess I've heard some of the current TPO providers have chosen not to do this. Sunrun
Yeah.
on their earnings call specifically mentioned that. A few others, I have not heard of any plans to do that, but there are some others that I think have a vested interest in providing this product to a lot of their cash and loan or traditionally non-TPO contractors. So I think those are the companies that are really trying to push it, maybe not the traditional lease and TPO companies. So that's something we're watching, is big assumption, a big driver for the market in 2026, if those things can ramp faster than we expect. A couple other things, I guess we also asked, I'll just hit this briefly. We asked how hard was it to get access to TPO financing? Because I think a little of your feedback on this, Pat, like the current providers are onboarding people, but they're being cautious. It's not like the door is just wide open. That came out in the survey. Like, yes, we could get it, but it's taking a while. And it's not 20 companies. And actually that shows up in your data. It's only, there's limited options. Curious would you agree with that? Like in terms of
Yeah,
access?
I think what you're seeing is TPO providers, especially with safe harboring, they're going to installers and trying to get commitments, volume commitments. And then if
Yeah.
they can fill like their goals with volume commitments from a smaller set of installers, then they will, and they won't onboard more. So I think we're definitely seeing that too.
Yeah. The other thing we asked was just how people are planning for next year in terms of reducing costs and I think a big thing was to offset the tax decline. I think a big thing was operational efficiencies. Included in that, I think, is bringing in some salespeople internally. I guess a big thing that's not really reflected in this chart too that I've heard is, again, they're expecting a better second half. So they're trying to smooth out, keep crews and keep
Yeah.
salespeople and smooth that out. And that also includes maybe offering some discounts. I've heard that a few, like just offering a discount to people in Q1 and taking the margin hit just to keep their fixed costs.
That
Yeah.
can make sense. Yeah.
Yeah.
Yeah, no, I actually like to see that 42% operational efficiencies. If people were like, "Oh, I just need to sell this new thing," or "I just need to do," it's no. What we really need to do is ensure that we're hitting timelines, bringing duration down. Those are the killers, and so that's actually good to see. That's where most people want to put their time and efforts.
And I guess you had an interesting data point that you mentioned around seeing some stretching of install times, right? With
Yeah.
this 20.
Yeah, the last 3 months, we've seen a big increase in install times, especially for loans, because we can track install times from loan versus TPO. And I think we'd all think, oh, that makes sense because there's more volume going toward loans and people trying to get those shoved in by end of year. But that could actually lead to a lot of attrition on those accounts. If you have to go back to those customers December 15th because you're not going to install them in time and they're not going to get the ITC, that could be a churned customer in your pipeline. So I think
Yeah.
the next 7, 8 weeks are going to be really critical for installers to make sure they're watching those timelines and get those customers through.
Yeah, I talked to one installer this week who said they're putting that in their contract. Hey, if we can't get it in by December 15th, we'll give you a right to cancel, which is not, they're actually putting that in to give consumers comfort.
Sure.
Yeah, certainly it can be a tight December to get those in.
Yeah, where it may be good to split your pipeline and put more effort toward the loan ones and maybe let the TPO ones take a little longer.
Right. I'm sure the TPO providers will be happy about that.
Yeah.
So the other thing that didn't quite come out in this chart that just came out in some comments that people sent in was around diversification. And I'd put those into two buckets. One, a lot of diversification, three buckets maybe, a lot of diversification around C&I. So trying to get into small commercial, which has a little bit better setup for the next couple of years. And then also just expanding into other energy efficiency, mainly HVAC. I've seen a few folks do that. I think it's a more competitive market and would maybe just focus on solar and storage, but some people are trying that. And the other thing too is around batteries, just people trying to do retrofits. And that's a topic I wanted to cover in a bit.
What month did you do this survey?
This was October.
Yeah, so I bet if you did the survey, I don't know, May, when the bill was being negotiated, that HVAC and kind of other product diversification would have been way higher. Because what we were seeing too is a lot of people
Yeah.
thinking the bill was going to go bad. They were actually like, okay, we need to bring on HVAC, we need to bring on more roofing, we need to, and then once the bill kind of hit and they're like, oh no, we have a tier off ramp, we saw a shift swing back to, okay, let's just focus on solar and battery, that core. So while we do see diversification still, I think the outcome of the bill actually changed that trajectory than what was probably going to happen.
I think there was a lot of, we actually did a survey. I have to check if we asked that question, but we did do a survey around May, and it definitely was more, the sentiment was more panic than what we're currently seeing. So it's a good shift. Okay. What else are you, I don't know, what else are you seeing in terms of preparing for 2026 or interesting tidbits in your data before we jump to opportunities?
I think we covered most of it. I think just again on the operational efficiencies one, as I'm having conversations with installers, there does seem to be more of a focus on ensuring that they are keeping crews busy, that they're protecting their margins, that they're looking at data better. And that's really the whole theme of this conference is around data. And just we feel like there is a big need for installers to get better at data. We're trying to provide some products and help for that. So yeah, I would just invite everyone to just make sure you have a really good data plan for next year.
Yeah, I would agree. And I've seen some of the stuff that you guys have on data for installers. I have a lot of conversations with installers about that too, because we have a data partnership program, and they want to participate, but it takes some time to pull together everything. So I think the stuff that you guys have really makes it easier to have people access that information really quickly and just have a better handle on their business, particularly around install timelines and project timelines. Okay, great. I think that's a good summary of current sentiment. So I'll show a few slides on data, but then I wanted to just frame some opportunities as I see it for next year and just for our overall industry. This is just some interesting data on what we've seen on sales proposals. So you have seen like the chart on the left there is kind of customer owned system. So you've seen that go up, and then in September, take a little bit of a dip. And then TPO went up less and has gone down less. So TPO has been a little bit more stable. You've seen that customer owned spike. So we are seeing that in some of the data that pull forward. And then this is just by state year-over-year declines. And so you're seeing almost in all those states, like Florida is down 23%, is now almost flat in September. And I bet October will be even better. Just some metrics on everything we've been talking about, the pull forward. Okay, I wanted to talk about a couple of opportunities, and I feel like we've been beating this drum for a while, but I thought I'd try to summarize it here in just what I see as like the setup for our market. So this is 10,000 foot view, but we can go to more of the tactical. And I think most people are aware of some of this, but maybe not as much detail. On the left there, this is just a summary of some of these key themes that are, I think, providing a great setup for our market. So one, we know this, but like utility rates are in the red. I just call it in the red zone, right? And that is actually before a lot of this AI demand. I mean, that some of that has hit utility rates, but that's more coming. This is more last few years, natural gas prices, infrastructure upgrade, all this other stuff. So they're already in the red zone. And then just going down on the left there, you've got AI and load growth coming, right? So that stuff hasn't even hit. There's 120 gigawatts that's going to be added, I think, in the next 5 years across the US. That's like unprecedented. And I think maybe 90 gigawatts of that is from data centers. So again, 120 gigawatts, I think it's 15% growth in demand in the next 5 years. So massive.
Week we hear some huge press release of some new big investment to more data. Yeah, that's crazy.
Yeah, exactly. And so there's a lot around data centers, and our industry we do not need to be experts on data centers, but I think we need to know how that's going to impact our market. And so what I see happening is that's creating a lot of political pressure around affordability, right? It's at a state level, at a federal level, there's all sorts of pressure. Like the rates are already high. We can't let them get any worse, right? We got to do something. And so what is the solution to managing those rates? And I've gone to school on electricity markets over the last couple of years. The real solution, as you add load to not really increase prices, is to squeeze more juice out of your current system. And that really that's really around managing peak load. So managing peak load is really the solution. And what is the best solution to manage peak load? There's a lot you can do. So these programs have been around for a while. There's CNI demand response, there's smart thermostats. The real thing that is going to happen in the next 5 years is storage. And I think people are rallying around that. So storage is the solution to managing peak load and to helping solve this affordability crisis. And I think people are rallying around that, and we need to position our industry around that. So that, I think people are starting to see that solution, and what's happening that's going to create opportunities. Just going up, I'm going up that right side there in terms of opportunities that I see. One, states, we'll cover this, but states and utilities are developing all sorts of VPPs in states that you would expect, like Massachusetts, but also states that you would not expect, like Georgia. So there's all these different programs that are coming out for storage. The second thing that people may not be aware of, we've been talking about VPPs, but there's also, I think, some creative solutions now out there, some ideas on how to meet the AI demand, how our industry can help meet AI demand. And I would encourage people to check out, there's a report by Rewiring America called Homegrown Energy, which talks about how some of these hyperscalers can actually procure data center demand by facilitating things like energy efficiency, but also batteries and solar at the home, right? So they would go and help fund some of this. I think that is an opportunity for our industry. And then another thing I'd call out is just growing investor interest in this opportunity. One obvious example is Base Power, which just raised $1 billion to do exactly this. And I think a lot of the folks on the phone are in the same position to take advantage of the opportunity. So I think that's just a signal. That's an important signal that there's people that weren't currently invested in this market that feel like something has changed. And now they're coming in and really putting their weight behind it. Hopefully that's a good framework. I love your input on that, Pat, but it's just macro, like why I think there's a big opportunity for our market and how we need to position our industry to fulfill that, help be a solution to some of these problems.
Yeah, I think you made a good point a few minutes ago. You were mentioning some of that diversification around HVAC or other stuff. And so there's one sitting right here, and it's batteries. And we've been talking about storage the last couple of years. Attachment rates are increasing in certain markets. So we are seeing it, but I don't think at the rate that we should. I think one issue is VPPs. And I don't know if you can touch on this, but as I've talked to installers, and a lot of them don't even really know that they exist or how to get enrolled for the customer, like what work needs to be done on the sales side to pitch it for the customer so they know it's an opportunity. What are some maybe tips or thoughts there on how they can just better adopt them or know what's happening in their market?
Yeah, I agree. I hear that all the time. I think you look at some of the larger companies like Sunrun has been way ahead of this. If you look at their attach rates and their enrollments in VPPs, it's like way higher than the rest of the market. So yeah, I definitely agree. There's a disconnect. There's also just this disconnect of states putting out these big goals and targets and like, how do we actually implement it? And I'll just give some examples of that. I think, practical examples, like work with your TPO provider if they're trying to incorporate it into what they're doing. I know it's a big initiative for them. Get smart with your TPO provider. And there's probably some sales training around it too, to help explain it to customers and like really work it into the pitch. That's probably a little bit too high level for folks, but that's where I'd start.
Cool.
And also just be aware of the programs. I guess also be aware of what's coming too, right? A lot of these things are in development in states like New Jersey, Maryland. So be aware of what's coming. I wanted to just share this chart out too, which like you said, there's been a lot of talk around VPPs and storage, but what's actually happening. And this is a chart of the storage market. So out of the entire storage market, how much is being sold combined with PV at the same time? And then what percentage is retrofits or just standalone storage?
Yeah.
Those are the orange and gray bars, obviously very small.
I'm surprised those are actually equal. The retrofit should be the easier sale than the standalone.
Yeah.
That could be a huge profit center for an installer if they took it seriously.
For sure. Yeah. I think we've scrubbed this data a lot. I think it's pretty close. I agree. That was my initial reaction, was I feel like retrofits might be a little bit bigger, but either way, it's really small, right? It's really small. And it's also concentrated in a few states. I feel like there's a big opportunity. That is what investors of Base Power are backing, is the standalone market. And so I think it's very small right now. And it's our opportunity to capitalize on kind of leading with storage and doing a lot of retrofits. There's 5 million.
Yeah, I feel like on the retrofit piece, it's if I'm an installer and I've been around for a couple of years, I have a few thousand customers I've done installs for. just going back and upselling batteries could be a bigger opportunity than trying to add HVAC or do some other thing. Yeah, I think that's just another call out of there's a lot of opportunity here, and you could be sitting on your own data, your own customers that you can go sell this to.
Yeah. Yeah, there's 5 million homes, over 5 million homes, I think, with solar in the US, and less than 10% have batteries, right? So huge opportunity out there. And this is just a few examples of the VPP programs that are popping up. Again, you would expect them to be happening in New York and Illinois, but there are a lot now. Virginia, which has a lot of data center demand, right? That's where in Georgia is where a lot of the data centers are. And so they are the ones that are also now coming out with programs. So markets that you wouldn't expect are piloting these programs. I think those are just things that kind of surprise us.
Yeah.
And should see more. I know I've been beating the drum on VPPs and storage for a while. This is just a summary of state goals. Again, there are these states with massive targets, and there's a bit of a disconnect, like how do we actually make it happen? But certainly there's policy is leading with big targets and goals. And I think you guys probably have a whole panel on storage, so I won't go into too much detail. I thought we could turn to utility rates as a second opportunity.
Yeah.
And just share some interesting data, unless there's anything else you want to cover on VPPs.
No, I think that's a good segue. It's just reminding people like the core mission of solar is to provide energy from the sun and hopefully save some money. And I think with what we're seeing with the utility rates, that case is going to continue for a while.
Yeah, let's start there. So this is some data that our team had pulled together, I think, a few months ago, with just highlighting on the left there what's been approved, and on the right there some of the proposals. And I also asked the team to pull together some very recent data on proposals and through last week, and I'll show that too. But again, I think you're seeing these are not 5% rate increases. These are in Illinois, you're seeing 18%, New Jersey 17%. These are very, very high. And a lot of that is coming from some of this data center demand, right? PJM, New Jersey participates in PJM, and that's why, and so Illinois is also in MISO. There's a lot of data center demand there, and that's why you're seeing 17, 18% increases. Yeah, that's certainly going to help our market. And then even in a state like Florida, I think the one in Duke, it has a surcharge there related to the storms, but still, if you factor that in, it's
over what period of time is that increase taking place? Are those typically?
Yeah, normally they're a year. Yeah, there's a year and a half or so, I think. But I think and I'm not an expert on rate cases, Pat. That's something I've been learning about over the last 3 years. But yeah, I think we've actually seen probably an increase in the pace in some of those in terms of how often they're happening. But yeah, I think generally,
it seems like if I'm a sales rep in Florida, I'll just take that. And there's like a whole article showing the rate increased and going to a customer and saying, "Did you know this happened? This is what you'll be paying next year. Let's lock you in now." So I think that just shows how important it is to know your local markets and know what's happening, because customers are going to feel this very soon.
I guess that's a good takeaway. I don't know if folks, sales teams use that. I know they're probably more reactive, like they know when a rate increase hits and bills have gone up, they've gotten their first couple bills. That's a good opportunity. But yeah, I wonder if you get really smart on rate cases and can go around to customers and say, this is coming in a year. It's very forward looking. You can say this is coming in the next 6 months.
Yeah, one challenge there is TPO providers and other lenders too. They'll put a cap on what you can model. And so like here you're putting Duke 24% increase, but typically you only can show a 4 to 5% rate increase, which is allowed by the utility, which I can get on a national level, but I think that's a call out for them to get a little more flexible in local markets, where if it is documented and shown that no, this rate increase is happening, you should be able to model something more aggressive that is going to be really what's actually going to happen.
Yeah, absolutely. And I've heard that from some more on the cash side, that some installers have been very conservative. Typically they do 3%. They've been doing 3%, but in the Northeast, it's been 8, very solidly 8. And so they're now saying we're going to do 5. And we still feel like that's conservative.
Yeah.
I know there's more constraints on that with the TPO providers, but yeah, this is just more recent data. I love looking at this. So we look at it, we track this on a weekly basis. This is just some very recent rate cases. So the dates are on there through October. So this is just as of the last couple of weeks. And again, you're seeing like Pennsylvania, Connecticut, even South Carolina, again, in kind of the 8% range, Pepco and Maryland. So it's not just the Northeast, right? This this is Midwest, Mid-Atlantic that are seeing these kind of rate increases.
Do you think there's a precedent where a utility sees someone else get away with it and so they're like, hey, let's try it here? Is that the driver of this, you think?
I think that probably helps. Yeah. When your peers are doing it and becomes the norm, it makes it easier. I think that I probably see that more also with net metering changes, where I
Sure.
think
Yeah, that billing.
a lot of states saw what California did and said, oh, California is the leader. We can take their leads. Rate cases is a little bit more structured around how those are done. They can't just make it up because their peers did it. But yeah, certainly on net metering, I think so in terms of a big policy change. Good. That was, I think there's a lot of opportunities, but I wanted to just frame those two. I think storage is probably a little bit underappreciated. And so I just wanted to bring that to the audience. And then the rate cases, there's a lot of noise, but I just wanted to put some numbers to that. Yeah, those are the two big opportunities, Pat, as I see it.
Before we jump to some questions that might come in here, I did want to ask, you guys made predictions on what you thought 2025 would be. Now we're here in November. Maybe you can't close out the year completely, but where do you think you're going to land on what you projected we're going to see this year and what we're actually ending up?
Yeah, I mean, gosh, beginning of the year, we like revisiting this stuff, but beginning of the year, it was a lot different environment. It was totally different. We didn't know about tariffs. There's no tariffs. Yeah. We were also expecting rate cuts. And I think, and then in the middle of the year, things changed pretty dramatically with the policy change. I have to check. I think we were maybe down 10% originally and may have taken that up to, down 5%. I have to check. But I think the biggest surprise is the 25D demand pull forward. That which couldn't have been predicted, and that's been a big surprise to the positive. But also, I think even if we look back a few months, we were probably a little bit more conservative on the impact of even that. I think people have just been more aggressive on trying to jam stuff in this year. We were really expecting it. And I think we saw this, like some of the loan providers cut off their levelized loan products in October, but there is still this big push to sell straight AM loans or other products through November. I think that has been stronger than we expected.
Cool. That's one thing about the industry we all chose, is that it's hard to predict every single thing that could happen in a given year. As you guys are, one thing we didn't really touch on, but I'm curious your thoughts on what kind of equipment availability, FIAC stuff, supply chain, other stuff could cause some issues next year. That's one we didn't really get into, and I don't know if you guys have data around that.
Yeah, we did ask questions on the survey. That is something that's weighing in the market, right? And I think we talked a little bit about it up front. What I've heard is, in our view, is at least for next year, the Q cells is a huge part of the domestic content module supply. Yeah, there's some others, but Q cells is huge, and they have this shipment that's been detained. And I think from everything that I've heard that they've been communicating to their partners is that this should get resolved. I think they've been a little bit more quiet publicly before anything's officially announced. But if that gets resolved, should be a lot easier. If it doesn't, that could be a real pain. But I think even if it gets resolved right now, there's going to be some tightness like December, January, and February. So I think we are seeing pricing go up for those. And it could, I think, just push projects out practically to get those installed. And so that's really on the TPO side. And then I think our domestic content, and I think what we've also seen is some of the TPO providers be very conservative on their AVLs of what qualifies as FIAC compliant, right? So I think LightReach has come out with an AVL, which is basically all domestic content with a few non-domestic content, like an REC or a Hyundai. They're being very conservative on what is FIAC compliant, which my understanding is a lot of that is from their different tax equity partners and insurance, and not wanting to take a risk on that. So yeah, for sure, there's going to be tightness there on the domestic modules.
We had a question come in, or a comment I thought would be interesting to say, is this said, one large barrier to retrofitting batteries is lack of battery-only options and barriers with adding batteries to PPAs. And I do think there are some trends happening there. So I know LightReach has come out with their battery-only lease. They've added a couple states. I know GoodLeap TPO as well. So I know I think they see the opportunity as well as a market. And we do know financing drives a lot of what's going on in this industry. So I don't know if you have comments on that of like other trends we might see to unlock that or make it easier outside of what those two companies might be doing.
No, I think the financing helps. There's also probably just, there's different formats for those batteries. I think like the base power model is an interesting one where it's totally different. It's like my understanding is it's like a HVAC unit.
Yeah.
It's like on a pad. It's on a big pad. It's like 35 kilowatt hours. So I think and it's meant to be installed quickly and just sized bigger, right? And so I think there's probably others that are doing that too. That's just one example, but I think people are, from a product standpoint, are coming out with other options. I guess also and I'm not an expert on this, but there's integration of kind of retail electric providers into that. So you can sell it as one package, right? We'll sell you the battery, but we'll also be your electric provider. And so there's a more innovation happening in that standpoint in Texas mainly.
Yeah.
But that could happen in other markets. So I guess that's a financing innovation, but also a rep innovation too, of incorporating that into the pricing plans.
Okay, awesome. I think we can wrap it there. We're at the 45-minute mark. We're like right on cue. You good? But yeah, thanks for preparing all that. I think it's a good kickoff for the day. Looking at data, understanding it, bringing it together is super important. And appreciate you doing that. And what you guys do for the market is awesome. And yeah, my summary here is that the opportunity for solar is still great. And there's going to be some good years ahead of us. I think for sure we need to watch Q1. We need to look at install durations right now, make sure we're not overextending ourselves so that Q1 leads to a lot of layoffs and contraction and other issues. We definitely don't want to repeat NIM3 patterns of the past, but overall, I think this has been really good. Good start to the day. Any last comments or words for everybody?
No, I think we are also very excited about the long-term opportunity. We are being cautious about Q1 and next year. I think we're generally a little conservative because we want people to be prepared for those situations. But yeah, we're very optimistic. We've built our entire business around this market. We are excited about the future.
Awesome. Rebecca, kick it back to you. Let us know what's on deck for the rest of the day. And this is just the first of many.
This is the first of many. We have 6 more action and info-packed sessions throughout the day. So please join. Thank you both so much. As always, a great presentation, great data, great insights. Thanks to all of our attendees. And as a reminder, you can access all the session recordings at the same event lobby that you joined after they've ended. And you can also learn more about this event at enerflo.com/SolarConnect, all one word. So thanks again, everybody. And see you in the next session.